Thank you so much for joining us today. I'm Marlin, Bohling, your tour guide to the ag commodities. Hope you do your civic duty and get out and vote today. It is election day, in case you just crawled out from under a rock. And make sure that you take care of that at some point today. Very important that you do that. I want to take a look at the Dow Jones Industrial Average right now and see what it's doing. This morning it was firming up and it's still very strong. December futures now 479 points higher. We're at 33,315. The U.S. dollar index value, on the other hand, had been going the other direction. We're still down 700 points, and December futures on the dollar index are now way below 110. We're down to 109.295. Could be very significant. Now, we had some overnight export sales. We had one batch of corn and 3 batches of soybeans. But those 3 batches of soybeans were only slightly more than that one large sale of corn. But it didn't seem to really help the cause too much. There it is, corn, 338,000 tons in Mexico. And then you add all the others together and you get something in the neighborhood of about, a little over 400,000 tons of soybeans, which went to Mexico, China, and also unknown destinations. But as we go back to the board here with our quotes provided by bar chart, you can tell we still have pressure, and corn on December is down 5 at 670 3/4. So it's back to its old tricks that we used to have last year. Every time we had an overnight sale, the market went down. Now in soybeans, we have January just a half cent higher at 1450 3/4. The deferreds just very slightly weaker way out there. Now the wheat market came charging higher out of the gate this morning. And it's all gone. December Chicago wheat now 9 lower at 836 3/4. That would be about 19 cents off of our overnight high in that Chicago market. And in Kansas City wheat, it had some strong gains going for a while this morning, even after the open. And you have December now 4 1/4 lower at 953. Well, that's 18 cents off of its overnight high as well. In Minneapolis, you have December down 3 3/4. We're at 956.5 right now. Well, Chris Swift is with us, and he is with Swift Trading in Nashville. And the markets are just kind of falling asleep on us here. Chris, what's your take on what they're doing?
You know, I think it might be in preparation for tomorrow. We're going to get a crop supply demand report tomorrow, and there's just really nothing with harvest showing pretty much all wrapped up now. There's not a lot to look forward to unless USDA can come out with some kind of changes in there. Some people are looking for about a bushel per acre increase on the yield to it. I wouldn't discount that a bit. I'm going to be anxious probably in another month to see what the unharvested acres are. If there got to be more silage chopped, or where we saw more abandoned acres out there, that would change the carryout significantly, regardless of whether they change the yield on the corn or not.
You know, that's something I haven't heard very many people talk about. And of course, we covered that at length here on our network between Western Kentucky, let's say, through parts of Missouri and into everywhere from Kansas to Texas. There was a lot of corn that never did make it to maturity. It just burned up, or they chopped it for silage, like you said. Could that be a big wild card in that report tomorrow?
Oh, I think so. Not only that, but as we go further down the line, anything that was chopped for silage, we understand that can be livestock feed, but you lose that kernel corn, and where we produce ethanol and other livestock feeds from that, and some human consumption of that. We really need that kernel corn out there that we probably are going to be shy of this year.
Okay. Well, and then, of course, we did hear a lot of stories of vomitoxin concerns in some parts of the country, but I don't know if it's widespread enough to really have a major impact or not. If that was the case, you couldn't even use it for ethanol because you couldn't sell the distilled grains off of that. So anyway, we'll maybe get some answers tomorrow. That report will come out at 11 o'clock Central Time. We'll have full coverage right here. In the meantime, we'll take a break. We'll come back and we'll talk livestock with Chris Swift right after this. Well, we're talking with Chris Swift of Swift Trading, and let's dive into this livestock trade. Our quotes are provided by Bar Chart on live cattle. They have been struggling all day. And you have December live cattle still down 30 cents. We're at 152.75. February down 45 cents at 154.57. So let's check out the feeder cattle market. Well, we're lower there too. And January down 60 at 179.32. March down 62 at 181. $1.62. I could swear these are the same prices that we had about an hour ago. Just going nowhere fast. On the lean hog trade, you currently have December down $1.75 at 85.30, and February down 87 cents now at 88.17. New information just came in. It is our new cutout information from USDA. It's our midday update, they call it. And on the beef cutouts here this morning, we were higher again. Look at that. Choice cuts up $1.21 this morning at 265.76. And select cuts up 93 cents at 236.85. Well, did the pork side go higher as well? Not really. Carcass values down $1.31 this morning. Loins down $1.62. Hams up 67 cents, but the bellies down $6.69. Let's go back to Chris Swift and talk about this here a little bit. Cash cattle trade almost non-existent here so far this week. It's kind of early in the week, but what do you think may happen?
Well, we talked about this yesterday where they're able to pull off a contract. The Packers are able to pull contract cattle in now. And so I don't think there's any kind of great rush to have to bid up for inventory, and especially as the margins continue to shrink between all the sectors of the retail meat sellers, the packer, and then the cattle feeder. We're not seeing the retailers able to push prices much higher to the consumer right now. So we're just kind of battling in between the industry there for the margins that are left over.
Okay, now when you look at the time of year we're in, I mean, we're coming up fast onto Thanksgiving, and then we're going to be in the full holiday season there for the next month after that. Does that cause unusual things to happen here in the beef trade? Just give me a quick answer. What's the trend normally after this time of year?
Well, for years, the last several years, there's been a big push for the rib. Holiday office parties and stuff where we get kind of tired of the poultry and the hams and stuff, and we go back to a beef. And we have seen that rib really shine over the last couple of years. This year may be a little bit tougher simply because of the inflationary aspects to the consumer, but that would be the aspect of it. We'd see a little bit of an increase in the rib price.
Very good information. Thank you, Chris, for sharing that with us. Chris Swift of Swift Trading. Janet, that's a look at our markets. Back to you.